What's up, everyone? Welcome to the Akuma Fund. Today, I'm going to be talking about the recent stock market downturn and some of my thoughts on it and what my next course of action will be. First, I want to give an overview of the current positions I hold and some thoughts on them. So I have, as you see here, about $1,100 into Atlantic yield. I bought the share price kind of high at 20.77, so right about the middle here of the 52-week high and low. I'm really excited about the recent downturn the stock has been getting over time. As you see here, I believe it hit $18 on Friday, but I'm really liking the new price of 1960, so I'm gonna probably dump another $1,000 into this, into Atlantic yield. I'm happy with let's look at the 1 year chart. So as you can see, it went up. I bought maybe around here. Whatever, I bought around here. And as you see, it's ticked down below $20, and whether it will take down more, I'm not exactly for sure, but I'm really happy with the new price. I want to purchase it below $20 to lower my cost basis. Next is AT&T. Surprisingly, I used to be down. Let's see here. Am I still down? Let's see. I bought 31. Yeah, I'm still down. I did not expect AT&T to hit below $30. It went really low just recently. If you go to the 1 month chart, look at that. Hit like $29. When I saw that, I was surprised, because if you look at the 1 year chart, I had bought at almost the previous low for almost the past 5 years, actually. Like a 5-year low. Did not expect it to go down even more. And with the new let's see if it shows dividend yield here. With the new starting yield on AT&T, it's pretty crazy right now. If we go to live here, there we go. So as you see here, Ford, no, that's a current P of 5.6, and look at the dividend yield, 6.75. If you would have bought it a few days ago, it was at almost a 7% yield. So this is even a better starting yield than I got it, and it's a dividend aristocrat and all that good stuff. So I think AT&T's at a really good price. Listening on the recent conference call, AT&T is, how do I say, they've got a lot of debt. They're growing certain markets, other markets of theirs are shrinking. Recent acquisitions and all that stuff. If you want to learn more about AT&T, you should do your own research on it, but I'll be making a video on it and why I have exactly 100 shares. And I had sold an options call over here. It doesn't show the price I sold it for. I sold it for $133. I was thinking about buying it back, but I decided not to. Buying back just means I have a sold options call and then I bought an options call. But as you see here, I think it went down to it's up 28%, so it went down a lot. It went down to like 80 cents. I could have made an instant $50 profit buying back my options call, not having to worry about it hitting sell price. But if I sell my AT&T, and if you for this options call, I mean, I'm okay with that. I mean, it's not something I'm not in love with this company. If I could put this money somewhere else, I'd be fine with that. So I tried to hold on to it. Tesla, this guy has been doing super well for me. I bought, if you look at the 1 month chart, right around, as you can see here, my cost per share is $275. I only bought 2 shares. Unfortunately, I should have bought more, but I'm thinking maybe I'll re-up on the stock. With it being a profitable company and all. And as you can see here, I'm up $110 and 20% on the stock, so that's pretty cool. But I'm planning on holding the stock forever. I mean, I honestly think Tesla will be an Apple or a Facebook or whatever. This company is awesome. Okay, so, and actually for a long time I was down on I was happy with the $275 per share, but I was shocked to see that I was actually down. As you can see here, it went down a lot. So I'm happy I didn't sell, and I'm not gonna sell even if it goes down to $50. I want to show you guys my my watch lists. Pay bills, news, research, watch list. Here's my current watch list. It's much prettier to look at when when it's on my phone, but whatever, it happens. I'd like to just go over these positions and where they. Well, oh wow, they really rallied. Lockheed Martin rallied a little bit, but so Atlantic yield was down on Friday. All of these were down pretty much, and they've all had small rebounces, like 1%. ABB, it was down. Lockheed Martin is the one that I really want to keep your eye on, but it was down 5%, and this is probably going to be probably one of my next buys. As you see here in this little screen, not super small, it's almost at its 52-week low. It was at its 52-week low. If we look here at the 52-week high, 52-week low, if we go here, 363 is the high, 283 is the low, and it's currently at 291 per share. This is a reminder that I should keep more cash on hand. Apple is looking really attractive. It's down to 213. I remember when it jumped up real fast from like 180 to like 230 or whatever. That's looking good. Iron Mountain REIT, huge dividend yield. I'm kind of nervous about this one. We've already covered these. IBM, this is actually another stock that's just continuing to get hit. Oh my gosh, it's down another 4% today. And as you can see here, it's at its 52-week low. Let's take a look at this company. This is probably going to be one of my next buys. I wonder what the forward PE is. Probably is, I don't know. But huge share buyback on this company. It's literally at its 52-week low, 5% dividend yield. They recently just bought Red Hat, so there's a lot of pros on this company, but obviously it's not really playing by the new rules, as it's playing the tech game like it's like 2008 or whatever, B2B, old B2B kind of stuff, and with it's transitioning. Nobody really knows if this company will continue to exist. They're financially super healthy, but once again, this company has a lot of cons about it, so this is a risk. With it being so down, with the starting dividend yield so high, and it being a company that has existed for such a long period of time, and it's been through different cycles. I think IBM started in maybe, how old is IBM? It's not like, didn't it start in like this, like the 40s or something? Yeah, no, it started in 1924, okay? So IBM has been around since 1924. And just think about the almost 100 years of technology existence that this company has transitioned through. And it's still doing its thing. And as you can see here, this is probably the tech boom, 2008, and then it's coming down off its high. But I'm looking at it, 5% yield, healthy cash flow. Might be picking up more shares of IBM. And another thing I'm looking at is SoftBank Group. SoftBank doesn't actually pay a dividend, so that might be a little shock to some people. But SoftBank is they just own all sorts of like technology companies or research groups or whatever, right? They're coming down off their high, dropping down to 38. They're up today, I guess, but there's a downward trend for them. They own, let me think off the top of my head, they own Boston Dynamics, the robotics company that has made robots that can do parkour and stuff. They just have a collection of tech companies like that. It's Japanese, and here we go. So domestic communications, Sprint, Yahoo, Japan, yeah. So I'm thinking I might buy some SoftBank. It's kind of like Berkshire Hathaway, but for tech. Really, really cool thing. Cool company. I probably will be purchasing some shares once after I do some more research, and if I choose to do more research, and we'll just go over all of the ones that I'm watching right now. So we have Raytheon, defense company, Northrop Grumman. These guys make they're a defense company that makes a lot of naval ships. AbbVie, a healthcare company. ABB, engineering company. Iron Mountain, data storage company. Apple, enough said. Lockheed Martin. This is the highest paying out of all of the defense stocks, trading at a pretty high PE right now, but I think right now it has maybe a 2.6 or 7 starting dividend yield. These guys are mostly aerospace. They make the F-22. Leg and Platt, this is a industrial company. SoftBank, this is a holding group. BEP, this is a renewable energy. I believe MLP. PPL Corp is a utilities company. 3M is a industrial company. Altria Group, or MO, is a cigarettes company. I hope if these continue to get hit, I think if they start around like maybe 6, 7, or 8% dividend yield, I'll be buying into $1,000 worth of MO. IBM, B2B tech company. Brookfield Property, basically, obviously it's in the name. They're a property management company. Philip Morris, another tobacco company. Fiddy, this is the only ETF that I'm looking at. When you're on Fidelity, you get certain ETFs that you can buy for free. Any Fidelity ones, and I believe BlackRock Capital ones too. Maybe it's Invesco. I'm not exact. I can't remember off the top of my head. But this right here is a compilation of foreign companies, mostly financials, and some other stuff. Just a good. I want to, because a lot of the companies, I'm pretty. I have a certain type of company I like to invest in. I'm thinking about maybe purchasing an ETF to get some spread in there. Conventa Energy is a waste to energy company. Tesla is a an automotive, let's just say electrical car company. AT&T Telecommunications, and I think there's a new thing for it. And Atlantic Yield is a renewable energy company. So these are the stocks I'm looking at. I hope these continue to go down so I can buy them at good prices. My next buy will be most likely Atlantic Yield. I might drop some money into the FIDI, and then maybe I'll buy some Lockheed Martin or Apple. But anything can happen. When I get cash on hand, we'll see what companies are where. This has kind of taught me that it's good to just hold cash, like a large amount of cash. I only have maybe $200 in my account right now. But good lesson to hold more cash. I hope you guys enjoyed the video. Just talking about what my plans are with the portfolio. The day is not yet over. Looks like everything is going to be up about 2% today. It could fall down, obviously, but let's look at the 1-year chart. So yeah, so I started investing around here. So if you really look at it in the grand scheme of things, this whole drop is not that big of a deal. Like, from the beginning of the year to now, you're still up, so it doesn't look like that big of a deal. Yeah, NASDAQ kind of got hit hard. S&P 500 is getting hit. I hope the market continued to correct. That's all I can say. Thank you very, very much for watching, guys. Akuma out.